All right, hey guys, we are going to get started. I'm Conrad, the mortgage man, buying land and building on it. Give me 1 second and we'll go ahead and get this show on the road. Let's go. All right. All right, buying land and building on it. Buying land and building on it. It's a nice design, a nice little house that he made. All right. So first, we're going to talk about the three paths to buying land and building on it. Then we're going to talk about buying land, land zoning, preparing the land, construction loan overview, and a few other items. You can see them right there. All right, let's go. Let's go. Oh, you have any questions along the way? Just feel free to unmute. You can share your screen or you can put it in the chat as well. We'll be checking the chat. So three options. The first option, land loan, construction loan, and permanent financing, right? Your second option is we can do a construction loan. So let's say you already own land, right? If you already own land or it was passed down to you, we can do a construction loan or we can include the cost of land in the construction, permanent financing, and then the last one is going to be OTC, which is a one-time closed construction where we put all of them together. All right, so if you're buying land, down payment is going to range from 15 to about 35%. I know that's a big range. I'm going to explain it. Credit score, you want the credit score to be about 660, right? The term is going to be 20-year fix, right? 20-year fix. And you want to make sure you check zoning, because zoning is going to tell you what you're able to build on it. Do expect to close in about 45 to 60 days. Now, for buying land, guys, for buying land, usually your best option is going to be a credit union, right? So in the chat, I want you to tell me where's the best spot that you can get a land loan from? The credit union. Where's the best spot? Where's the best place to get a land loan from? So as I said earlier, right, that 15%, usually those are going to be your credit unions. If you go to like a mortgage broker, they're going to start at like 30, 35% down. But the best place to get your land loans are typically, or the most competitive terms, are going to be a local credit union, right? Do expect 15, 35% down in 20-year fix, not 30 if you're just buying land. All right, so we talked about the three paths, right? We talked about buying land. Let's get a little bit into land zoning. So here's kind of like a zoning chart, right? So you can see things are sometimes zoned agricultural, R1, R2, R3. You got a commercial, C1 to C3. You got industrial, institutional, right? Park and recreational. So this is just like land zoning. And then here's like a view of, let's say, a map. So let's say, for instance, just a given city, right? You have a city, so you're going to have these are different zones. So in different zones, you can build different things. So you want to make sure when you're buying something, right, that you know what is it zoned, and also too, what are the regulations with rezoning if you want to build something that's outside of the parameters, right? So just a map overview of a city and the different areas or the different zones. All right. So we talked about the three options. We talked about buying land, it's 20% down, and usually you're going to get competitive terms from credit unions, right? We talked about land zoning. Now we're going to go into preparing the land, preparing the land. All right, so when you're preparing the land, this is going to be land clearing, demolition, if you currently like have a structure on there that you're trying to knock off, soil testing, foundation prep, utilities, and draining system, right? So also getting a blueprint from an architectural engineer or architectural design is what it's called, getting a builder, right? And then getting the permits to build what you want to build, which you'll get those from the buildings office or the planning office. So in the chat, tell me the name of the office that you will get the permits from to build. What is the name of the office in the municipality you're in that you would get the permits to build? What's the name of the office? Let me see. Building office, but yes, yes, it is the building and or the planning office, right? That's where you want to go, and that's where you'll get the permits. We'll talk a little bit more about that a little later, right? All right, so preparing the land, right? Building permit. So what you're going to need is your information, contractor's information, license, their information, the structure. Are you doing something commercial? They want to know the bedroom and bathroom count. Is it going to be stick built? What's the ETA of completion? What's the construction details? What's the electrical and plumbing plans, right? Window door size, drawing of the structure. So you'll take all of this to the building's office. And typically, if you're working with a builder, they'll do it for you, right? Because they know people down. They probably got their cell phone and stuff down at the office. So you're going to get all of this information and you're going to take that and that's what you're going to use to get the permits to build. So what you're going to get is something like this, similar to it. It'll say building permit. You just want to keep this visible at the site where you're building so you don't have a fine or anything because sometimes inspectors will be coming by and they want to make sure what's going on here with this piece of land and is it permittable, right? So you want to make sure you go to the building's office, get your permits, and then you want to have these clear and visible at the building site. All right, so getting a builder, right? So when you're picking a builder, the main thing you want is experience, right? So you want them to have at least like three recent projects that they've done. License and insurance information, you want to have that. And then reserve. So lenders typically want to see that builders will be able to finish the project. They don't want them to start and, it's too much of a risk, right? For them to start and not finish. So they want to make sure they have some cash, some liquid cash, some reserves, and then references. Typically, they want to see who have they built for before, past clients. You'll get a builder's packet. So what happens is if the builder isn't already registered or accredited with that lender, what's going to happen is we'll just give them a builder's packet. They'll fill it out and boom, they'll be approved. So if you have any questions about a builder being approved or if they're not approved, they would just fill out a packet. And as long as they meet the guidelines, they would be approved within like I'd say like a week, 5 days or so. All right. So we talked about the three options to buy land and build. Talked about buying land, land zoning, prepping the land. Now we're going to go into a construction loan overview. So we're going to overview construction loan. All right. So construction loans. Down payment is going to start at 20%. It can go up to about 35%. You can use the land as equity. So what that means is if you already have land and let's say it's worth 100,000 or 80,000, right? And we're now doing a construction loan, we can look at using some of that equity, just like a cash out refinance to build on that, right? So credit score, you're looking at about 660. And construction loans are usually going to be about 12 to 18 months, interest only, closing in an LLC. Those are the expectations. All right. All right. So the documentation. So when you're looking at just a construction loan, here's the exhaustive list of everything you're going to need. Driver's license, the rehab budget. Well, really, this is a construction budget, right? Just an Excel sheet. So line item with windows, door trim, everything is going to be line item like on an Excel sheet. Your insurance rep contact information so we can get insurance going. Title reps contact to verify ownership interest. General contractors information, the plans, the permit, voided check. HUDs if they have experience. So if there's like closing statements from past builds, and then entity documents. Because again, remember guys, with construction loans, they're for entities, not for individuals. So question in the chat, construction loans, are they for entities or for individuals? In the chat, tell me, construction loans, are they for entities or individuals? Entities or individuals? Let's see. Entity. Okay. Yes. Construction loans are for entities. All right. So here's terms for a construction loan. And this is actually, let me move this down over here. All right. So this is actually terms I got last week for one of my clients. I did like the address isn't on there, so don't worry. So this is just a construction loan. So you'll see the underwriting fee. Let me go back, sorry. Right. And you will also see, let me see that. That's the attorney fee, the insurance premium. So we don't have insurance yet, but that would be added here. So the origination, that's 2 points, broker, that's 2 points, and then the interest, right? Until we for the end of the month, that'll be about 14,000. So all the closing costs are 14,000. Let me break the rest of this down so you kind of know what you're looking at. So he's buying the land. The land is going to be 65,000, right? 65,000 for the land. The construction is going to be 264. So the land costs plus the construction cost puts us at 329. So land, construction, total build is 329. Now the loan, if you'll see, that's 263, 200. So what that is that is the 20% because the loan to cost is 80%. So it's 20% down payment, right? So that's the down. So the total cost, so the land, the construction, the total, the down payment is there. The closing cost is right here, right? And then we have the cash to close. That's the down payment, 20% plus the closing cost, right? So we're looking at about just under 80,000. Now what's required is 123. Let me break that down, right? So the cash to close, the down payment and closing cost is 79, right? That's right there. The rehab and continuance, that's going to be, they want you to have about 6 months of or sorry, they want to have about 10 to 15% of whatever the construction is, that budget already saved, right? And then the rehab reserve, you're going to be looking at about 6%, right? Sorry, 6 months. So 6 months. So if we look here, where are we at? This is the monthly interest, right? So here's the monthly interest. If we multiply that by 6, we get right here. Because again, with this, they want to give you money and let you borrow and finish the project, but they want to make sure you have some money or some cushion because things can go over budget. And so they want to make sure you have some just in case money, right? So all in, he needs to show 123,000 in the bank. Cash he needs to bring in just under 80,000, but this is going to be for the reserve requirement, right? And then this is going to be showing that he has a little bit of the construction budget, right? So those are those numbers overall. So you'll see loan to cost, like I said, he's putting 20% down. If we come over here, closing in about 10 days, interest rate at 13. So again, the interest rates is going to fluctuate. So this was a first time builder, no experience, right? But if you have some experience, you can expect slightly better terms, slightly lower rates, and slightly less down. All right, any questions? I think I kind of did that kind of fast. Any questions? But terms will look something similar to this. But again, you can include the cost of land like this is in the construction budget. Any questions? Any questions? Any questions? All right, cool. All right, so we talked about the three paths of buying and building. We talked about buying land, land zoning. Now we're going to get into permanent financing. Okay, so permanent financing. So after you have a construction complete, the building's office or representative will come and walk the property, and you will be issued this. It's a certificate of occupancy. So this is saying this is no longer dirt, right? Or just a wooden structure, but this is actually a livable structure. So whenever you're building something, when it's complete, you want to get your certificate of occupancy. Otherwise, you cannot get permanent financing. So you need a certificate of occupancy, and it'll look something like that. You can just hold it up somewhere in the establishment. So permanent financing. So again, you went from an idea to now it's fully done. So now you're going to need the permanent financing. So permanent financing, if you're an investor, will do a DSCR, which is a debt service coverage ratio, right? The appraisal with the rent schedule. So what that means is the appraiser is going to go say the home is worth X. I see appraised value. And then they're going to say, and it can rent for Y. It's called the market rents, right? So as long as the market rents will cover the mortgage payment, we are good to go. You're looking at 20% down, but since you already built the property, you have some equity in there, right? So you may have that 20% and you may not need to put a down payment because you already have enough equity depending on how the numbers work, right? Credit score about 620, but really if you're at that 620, you're going to be looking at putting a little bit more down than the 20%. All right, so now we're going to talk about one-time close construction. One-time close construction. So this allows first-time home buyers to buy land and build on it, build their primary residence. You can avoid the hefty down payment from the land loan and the construction loans. Because if you remember earlier, right, I said land loans are starting 20% down, right? Construction loans, again, 20% down. So if you're like, hey, I'm a first-time home buyer, I kind of want to buy my own land and build on it, but I don't want to put 20% down of a land or a construction. Well, you can still do permanent financing. You can do it all in one. The reason it's called a one-time close is because, again, that first method, you're buying land, you're paying closing costs. Then you're doing a construction loan and you're closing, that's closing costs. And then you do the permanent financing, there's closing costs. So there were three loans that you did, right? So the one-time close construction, instead of doing a land loan, then a construction loan, then permanent financing, you can do permanent financing and include the construction in it. So if we're going conventional, 700 credit score, right? If we're going VA, 580. Down payment, again, conventional 5%. It's a standard traditional loan. VA is going to be 0. Debt to income per AUS, or that's automated underwriting system, what approves it. Builder needs to be approved. And again, if the builder's not approved, or if you're not sure, we'll just give them a builder packet. It'd take like maybe 5 days to verify everything and make sure they get approved. So one-time close construction. So if you, put this over here. All right. So if you own the land already, right? If the land is free and clear, then it will say construction right here. This is going to be the closing disclosure, right? What you get at closing. If you own the land, but there's a lien on it, it's going to say refinance, right? And then lastly, if you're purchasing the land and the construction, then it's going to say purchase. So that's going to determine the purpose right here, which is going to be on the closing disclosure. But here's what a closing disclosure look like. It's very similar to, a traditional FHA, VA conventional loan. But that's those are the distinction. All right, so we're gonna recap and I'm gonna go through the steps on how to build a home, right? How to build a home. So first, you're gonna prepare the site, lay the foundation. You're gonna build the rough framework. You're gonna install plumbing, electric. You're gonna fit the installation, interior drywalls, final interior touches, and let's see, let me move this over here. And then we're gonna have installing bathroom appliances, fit the mirrors and finish floors, and then final confirmation from the builder. So let's actually go through that really quick. So again, the first step is you're preparing the site. So again, you're clearing everything. If you need to do any demolition, you're doing the demolition, and then you're going to be pouring the foundation or pouring the concrete, right? So it looks something like this. This is the first step to building. Second, you're going to build the framework. So the framework is, the framework. So you'll see, hey, here's the foundation, and then we're going to just build the framework on top of that. That's step 2. And then after you have the framework built, Then we're going to start with the plumbing and the electrical work. So you'll see the plumbing here, red, blue, hot, cold, right? And then you'll see the plumbing and the piping being set up and situated through the home, right? And then you're going to fit the insulation. So that's where you're going to go ahead and fit the insulation in between the stick built or the sticks that you're building. And that's fitting the insulation in the home. And then next, finishing the interior drywall, and you'll start on the exterior. So here's, they're putting in the drywall to set up so the insulation is being, smushed in, right? Next, you're going to do the final interior touches. So you're going to be doing the painting, installing the light fixtures and all the things, right? So you can see him here, he's painting, he's installing the light fixtures. And then 7, any hardwood floors or any of the countertops, you're putting those in at this stage. And then 8, the bathroom. So you're putting in the sinks, you're putting in the toilets, you're doing those. And then last 9, you're going to do the landscaping. So you're going to get the grass, or are you doing turf, right? Are you putting in shrubs? Are you putting in flowers, roses, things like that? That's going to be the last step. And that's a recap, y'all. That's a recap. So, in recapitulation, we talked about the 3 paths to building. So again, that's first you can do a land loan, close. Then you can do a construction loan, close. And after it's finally built, then you can do permanent financing. That's path 1. Path 2 is going to be you can do a construction loan, including the cost of the land. After it's built, then do permanent financing. Right. And then the third path is you can do an OTC, which is a one-time closed construction loan where you include it all together. It's just permanent financing, but it does allow for the construction. Right. Then we talked about buying land. Again, best spot to buy land is probably going to be your local credit unions. You can get away with a lot less down. We talked about land zoning. So land zoning is going to be, how is that land zone? Because whatever you want to build, it needs to comply with the laws or the regulations of that municipality. Preparing the land, demolition, soil testing, clearing the land, right? We need to do that. And now sometimes you can include those costs with a construction loan. So if you have some trees or things like that, you can include demo and land clearing with your budget if the numbers work. Construction overview. So we talked about what a construction loan looks like. I showed you guys some terms, showed you the documents needed for a construction loan, and then permanent financing as well. Any questions? Any questions? I'll just kind of like go back through this again. So just so y'all can see it like, one other time. But do y'all have any questions? Any questions? Start here with buying land zoning. Here's a pictorial representation of land zoning for a city. Preparing the land, right? You want to do the land clearing, demolition, soil testing, foundation prep. Getting the permits. Here's everything you're going to need for the permits, but mainly the builder's going to take care of getting the permits for you. Example, what it looks like. Finding your builder. Construction loan, looking at minimum 20% down. They're usually 12-month interest-only payments. You're usually, depending on the actual builder, it may take them like 7 to 9-ish months. So you have some cushion and you may be able to extend if you need to. Documentations for a construction loan, if you just want to do a construction loan. Terms for the construction loan in case, and you're going to need the down payment, 20%. Closing costs, but then they also want you to have some reserves, right? They want you to have 6 months of that interest only payment, and then they want you to have a piece or part of the construction loan because again, things can go over budget. They don't want you to be completely broke. They want you to have something so you can kind of get started in case things go over budget. You have a cash cushion. And permanent financing, you get permanent financing after you get your certificate of occupancy. This lets everyone know that this is a livable structure and that it's already been inspected. That's That's pretty much it, y'all. That's pretty much it. Any questions for me? Any questions? Any questions? Let me check the chat. Questions? No. All right. If y'all have any questions, let me know. You'll get the full playback via email. And if you need me, call me, text me, email me, DM me. I am available. Thank y'all for coming. I appreciate it.